Welcome to USDA Financial Tools. This was originally presented in 2017 at the ASBO Best Practices Conference. It has been updated to reflect recent USDA guidance. I'm Catherine Hodges from the Department of Education, Office of Nutrition Programs and Services. We will be covering specifically issues and the tools for which most business administrators will be responsible for. Federal regulations require that every purchase made out of the nonprofit food service account be made using a procurement process, no matter how small the purchase is. The regulations do set out a different process for micro, small, and large purchases. Purchases under the small purchase threshold can follow the informal procurement method, which is simpler, but it is still a procurement process that must be followed. Procurement regulations flow from federal to state to local. You should follow the strictest regulations that apply to you. If local or state regulations conflict with federal regulations, follow the federal regulations. In 2010, when the paid lunch equity regulations began, Federal OMB reviewed the equity issue nationwide and discovered that the additional amount that the federal government was reimbursing for a free meal was being used to keep the meal cost for a paid student artificially low, rather than being used to improve and enhance the meals program. Over the past 8 years, school food authorities have had to either increase the meal prices for paid students or commit non-federal dollars to cover the cost to meet this requirement, or a combination of both. For some SAUs, this has been a long process, as USDA has not required that you either increase the weighted average price or commit non-federal dollars of more than 10 cents per meal per year. But it has necessitated that often the prices go up every year at school, which has caused some concern among households. New for the 18-19 school year, and again for the 19-20 school year, is the ability to request a waiver of this requirement if the SFA could show that there was either a positive or zero balance in the food service account for the 18-19 year as of January 31, 2018, for the 19-20 as of 12/31/18. It is unknown if this waiver opportunity will be offered in future years. USDA releases the PLE tool anywhere between November to April each year. Best practice is to complete the PLE tool as soon as the October claim figures are out and the PLE tool is available. This way, you'll be able to act upon the results in a timely manner. For example, you'll be able to go to the school board to ask for a price increase for the following school year and still be ready to complete the annual application to participate by the start of the next school year. The weighted average price identifies the number of meals sold at each paid lunch price offered throughout the SAU. The tool will compare this weighted average price to the current year's Section 11 reimbursement rate. This reimbursement is adjusted every year. Therefore, the PLE has to be completed every year, unless you have the previously mentioned waiver. It could mean that one year you are in compliance, but the next you are not. This SAU sold 3,556 paid lunches at $2.25, 3,688 paid lunches at $2.75, and 3,302 paid lunches at $3.25, for a total of 10,546 paid lunches for a weighted average price of $2.74. The final calculation used is 28,874.50 divided by 10,546 meals to equal 2.7379 or $2.74. The unrounded requirement is the result of the previous year's tool, the target that you are trying to meet. Every step along the PLE is allowing for rounding down. Therefore, the actual target without rounding is brought forward to this year's tool. By entering last year's unrounded weighted average price from the Report tab, Section 1, Box A, into the Unrounded Requirement Finder tab of this year's PLE tool, you will find the target of next year's PLE process. This is telling us that last year the target was $2.78. Next year the target will be $2.86. The previous screen identified a current weighted average price of $2.74. The tool will round the 286 down to the nearest nickel, which leaves a difference of 11 cents between 285 and 274. This SAU must act upon 10 cents, either by raising prices, making a board commitment, or splitting the difference. There are multiple reasons to not wanting to raise prices, and there are multiple ways to address the results of the tool without raising prices to the students. We're not going to use this time to train you on how to complete the balance of the PLE tool. Rather, we will highlight some of the areas that are usually of interest to business administrators. Enter the current weighted average price as determined by the October claim numbers and applicable prices. Following our example, $2.74 would be entered here. We started with using the October paid lunch claim figures. However, at the end of the year, if a price increase was required but not addressed, then food service will submit an invoice to the SAU for the total number of paid lunches served throughout the year times the board commitment. The invoice will require a transparent transfer to food service. Remember, if prices are raised throughout the year, it affects the food services account's bottom line. The non-federal calculator tab will provide an estimate of what that end-of-year invoice could look like. It will give the board an idea of what to expect at the end of the year. Enter the total number of paid lunches applicable to the entire identified school year. This is not where you would put in the amount that the general fund has contributed to the federal meals program to cover the red at the end of the year. If you have made the decision to not raise prices if the tool instructed you to do this during the identified time frame, but instead have made a commitment to cover the cost with non-federal funds, this is where you would put that amount. Please recognize that the resulting dollar amount that is provided on the form is an estimate of what the board can use for planning purposes. The actual commitment will happen at the end of the school year when food service submits an invoice to the SAU for the actual number of paid lunches served throughout the entire school year times the commitment. This same information would be used for the split calculator tab if applicable. The split tab would only be used if the decision was made to split the results between a partial increase to the students and a partial commitment from the non-federal funding sources. A visible, transparent transfer must occur that shows that food service has been provided these funds. This is a reviewable item during the administrative review. Until USDA has studied the issue and is satisfied that the meal prices are now in equity, the requirement to complete the tool and act upon the results will remain in effect. As discussed before, the options are, if applicable, raise price of paid lunch, make commitment to cover the required increase with non-federal funding sources, a combination of both, or request a waiver from the state agency if Raising the price or transferring non-federal funds to the food service account would cause the food service fund balance to be over the 3-month average expenditure allowed in the nonprofit account, or the food service account balance was either zero or was positive as of January 31, 2018 for the 18-19 year, or December 31, 2018 for the 19-20 year. The PLE tool is generally released anywhere between November to April. Best practice would be to do your PLE as soon as the tool is released and you have your October paid lunch claim numbers. That way, you have time to act upon the results. The current weighted average price is calculated based on entering your paid lunch numbers and the sale prices into the tool. The tool will determine the weighted average price for you. That price is then used by the tool to determine what the next target weighted average price will be. The unrounded weighted average price for this year will be the information that is part of next year's tool. Challenges that the office has seen in reviewing the PLE tools are: last year's tools report tab's unrounded price is the figure that is put into this year's unrounded requirement tab. We often see all sorts of numbers instead. Basically, if you don't start off with the correct number, you will end up with an incorrect one. While not wanting to raise the prices to the students can be a good thing for the paid students, you have to realize that your weighted average price will never catch up to the annual target. Therefore, you will probably always have to act upon results rather than having a year or two off. Only the paid lunch information should be entered. If you enter free lunches as $0 and reduced lunches at 40 cents, you will skew the weighted average price. And now for something completely different. Again, we're not going to cover how to complete the form, although this is probably the easiest form to complete. It's the gathering of the needed information that may take some time. The intent is to show that the percentage of food dollars being spent on food that is not part of a reimbursable meal is equal to or less than the amount of revenue that is generated for the sales of the non-reimbursable food items. Both the costs and the revenues are percentages when compared to the total food costs and the total revenue from all sources, except for the transfer from general funds at the end of the year to cover the red. Most books are maintained so that you can at least see food costs, supply costs, and labor costs. You are interested in only the food costs. The obvious foods that are not part of the reimbursable meal would include ice cream, snacks, water, a la carte sales, vending machines, catering, and adult meals. The cost for these items and the revenue generated from the sale of these items must be kept separate and used on this form. The tool will kick out a percentage of costs that must be met by the revenue result. If the percentage is not met, then a corrective action plan will need to be developed. The corrective action plan can cover such things as raising a la carte and adult meal prices, reducing what is being spent on non-program food, or even working on the posting to the general ledger and confirming that the costs and the revenues are being recorded accurately. This is a reviewable item during the administrative review. Non-program food is NPF. NPF are all foods that are not part of a reimbursable meal. NPF would be adult meals, catering services, vending machine sales, a la carte sales, as well as chips, ice creams, flavored waters, plain water, etc. Yes, a la carte milk is considered non-program food. New in this current year, USDA offers the option to select a reference period other than a full year. You can choose a week or a month, but it has to be a full standard time period. no holidays during the week, or lots of snow days during the month. We added another attachment to the annual application to participate that asked that the reference period used to complete the non-program food revenue tool be identified. Best practice: attach copies of the reports used to complete the NPFR tool and retain in your files. The state agency reviewer will ask to see these documents during an administrative review. Since this area is covered within an administrative review, it is important that the reports that are used to complete the NPFR tool are attached to the tool and placed in the file. This will support the numbers used in the tool. When milk is sold as an a la carte item, both the cost and revenue generated would be reported as non-program food. When milk is purchased to be part of the reimbursable meal, the cost would be reported as program food. The reporting of the milk purchased and sold as non-program food would have to be separated from the program food. If at the end of the tool process you find that the revenue does not meet the percentage expectation, a corrective action must be created. The corrective action plan will be reviewed during the administrative review to verify that the plan was put in place. Everyone procures. Everything that comes into the school district, whether goods or services, are purchased in some way. Per the 2 CFR 200 Super Circular, all procuring entities must follow a code of conduct and written procurement procedures. The code of conduct may be called different things in your school district. We have seen staff ethics, employee responsibilities, code of ethics. If you have anything like this, you are on the first step of being compliant. Basically, the code of conduct instructs and guides the employees who procure on your behalf in the proper ethics in procuring. It identifies the SAU's philosophy, addresses conflicts of interest matters, and applies disciplinary actions when violations of the code occur. You should review your document and confirm that it contains all the required provisions regarding procurement processes code of conduct. The code of conduct must address the issues listed on this slide. The state agency has a sample document that can be used to help create your own policy, which would need to be approved by both your legal counsel and your school board. This is a reviewable item during the administrative and procurement review. Your written procurement procedures would be the document that is followed for any level of purchasing. It should be detailed enough to provide a step-by-step process for any reasonable person to follow. It should identify the SAU or district small purchase threshold, how micro purchases are handled, how many quotes are required for purchases made between the micro purchase level and the small purchase threshold. That's the informal. How a formal purchase, invitation for bid, or request for proposal would be developed, and where it would be advertised, how it would be evaluated and awarded, and who would be managing the resulting contract. What should be done in emergency situations? Who is responsible for the purchasing process? What steps are taken to encourage small businesses, minority and/or woman-owned businesses to participate in the process? The Code of Conduct and written procurement procedures are reviewable items during the administrative procurement review. Every level of procurement would follow this process to some degree. The federal micro purchase level is currently set at $10,000. If the goods or service falls under that amount, you only need to make the purchase. The only caveat being that if subsequent similar purchases are made, the purchases must be spread equitably around to all available vendors. Micro purchases would follow steps 1 and 4, identifying the need for the item or service and getting it. Small purchases or informal would fall between the federal micro purchase of 10,000 and the SAU's small purchase threshold. The federal small purchase threshold is currently set at $250,000. You would use either the federal or your own, whichever is most restrictive. Small purchases would follow 1 through 5 with some modifications. Number 3 would consist of contacting multiple vendors to obtain quotes. Number 4 would generally be a purchase order rather than a contract. Formal purchases, or anything over the SAU's small purchase threshold, would follow 1 through 5 with no modifications. Food service management contracts would follow steps 1 through 5 with no modification. All documentation for all purchases of goods and services must be maintained for 3 plus the current year. If it is a multi-year contract, it's 3 plus the current year after the last year of the contract. All food purchased for the meals program must adhere to the Buy American regulations as outlined in Guidance Memo SP 38/2017, which was issued on June 30th, 2017. Food must be from the U.S., or the food must be processed in the U.S. with at least 51% of the product used in the processing coming from the U.S. Exceptions fall into these two categories. Product is not produced or manufactured in the U.S. in sufficient and reasonably available quantities of a satisfactory quality, or competitive bids reveal the costs of a U.S. product are significantly higher than the non-domestic product. If you are accepting a product that falls into one of these two categories, you will need to retain documentation that supports the decision to accept the product. USDA does not define significantly higher. What is significant to one SAU may be insignificant to another. Before using an exception, ask yourself these questions about your menu. Are there other domestic sources for this product? Is there a domestic product that could be easily substituted if the non-domestic product is less expensive? Is the product being solicited at the best time of year? Is USDA Agricultural Marketing Services, or AMS, being used to determine the cost and availability of domestic and non-domestic foods? If an exception is being used, there is no requirement to request a waiver from the state agency or NERO in order to purchase a non-domestic product. However, you must keep the documentation that justifies your use of an exception per transaction. To be totally compliant to the Buy American regulations, the product needs to be grown and processed in the USA. The Buy American regulations are applicable to food components of the meal only. If the product is not grown and is not processed in the USA, then you need to have on hand documentation that supports one of the two exceptions. The product is not grown in the US in quantity that would be needed to supply the field, or the price of the product grown in the USA is substantially higher than what can be purchased outside the USA. The documentation is based on the product received. It cannot be a year-long statement unless the product is never grown in the USA. If you have a contractor that provides your food, get them to help you with this issue. Have them notify you when what you are ordering is non-compliant. Set up a system so that you have pre-approval acceptance before non-compliant items come through your door. Have them include the country of origin on the invoices or receiving reports. Have them automatically provide the supporting documentation with the non-compliant item. Any food-related RFP and its subsequent contract must include a provision regarding compliance with the Buy American regulations. Without that provision, your contract is not required to comply. However, the SAU is still required to follow federal regulations. Once the provision is in your contract, have your contractor help you to comply with Buy American. Ask that they include the country of origin on the receiving slip and the invoices. For any non-USA country of origin, have them provide documentation that supports one of the two allowed exceptions. Attach the exception documentation to the invoice and retain for 3 plus the current year. Part of the monitoring of your food service and managing the food service management contract, the person who is responsible for monitoring and managing should visit the pantry and look at country of origin. They should address anything out of compliance with a food service management company. Since the food service management company is purchasing on your behalf, they are required to comply with federal regulations. In fact, there are provisions in all FSMC contracts that state that the Buy American regulations will be followed. If the regulations are not being followed, then the contractor is breaching the terms of the contract. All FSMC contract documents must be reviewed and approved by the state agency before they are signed by the interested parties. This includes each renewal option. Renewals must be provided to the state agency before the current contract document expires. When a contract document expires, all potential renewal options also expire. There must be someone at the SAU office that is assigned the responsibility of monitoring the vendor and managing the contract. There are many do's and don'ts for the FSMC responsibilities, but these are the major ones. What can they do? They can create the menu. They prepare and serve meals. They maintain the point of service. They train employees. They maintain training logs. They can enter claims. They sit on wellness committees, and they sit on advisory committees. What can't they do? They can't process income applications without an individual at the SAU acting as a confirmation official on each application. They cannot maintain the advisory committee. They cannot submit claims. They cannot enter or submit the application to participate. They cannot conduct the on-site monitoring. You might question, why do I have to do anything when I'm paying someone to run it for me? Well, that's a very good question. My analogy is that while you are no longer making the peanut butter sandwich, you are still responsible to make sure that the peanut butter sandwich made by your contractor is served on whole grain rich bread, that the peanut butter is in the correct serving size, that it is offered with fruit, vegetables, and milk, that the vegetable subgroup requirements are met, that the meal is served at the applicable meal benefit and is counted appropriately, and that the entire meal meets the Buy American regulations. While the company will do the work for you, it is still your responsibility to make sure it is done in the right way. The permanent agreement that is held with the state agency is with the SAU and not with the vendor. Managing any kind of contract involves making sure that you receive what was requested in the way that it was requested, and that you are billed for what you requested and received. Pages 84 through 89 of the 2016 Contracting with Food Service Management Companies Guidance to SFAs Manual is a form that can be used to monitor your company. While eating lunch is a great start in monitoring the FSMC's program, it cannot end there. Documentation of the monitoring efforts must be maintained. At the very least, you still need to visit the storage area and make sure dust isn't accumulating on unused product. Make sure that the vendor is adhering to the Buy American regulations. Review the menu and make sure that the meal pattern is being followed. Stand with the point of service and make sure that the employee understands reimbursable meals and what they consist of. Make sure that the point of service doesn't have the words free or reduced on the screen. Make sure that the folks preparing the food are following proper food safety procedures. Yes, you must monitor your FSMC's procurement process. You must hold them to the same level of responsibility as you would hold yourself when they are procuring things on your behalf. The SAU may incorporate the vendor's procurement process into their own, but it cannot be the only process for the SAU. At some point, the SAU went through a procurement process to hire the FSMC. What process was followed when that happened? There may also be other costs that are charged to food service. How are they procured? If they are goods and services that are not run through the vendor, what process is being followed? It needs to be yours. In addition, many of the contracts that are reviewed by the state agency include a provision that the FSMC will be following the SAU's Code of Conduct and Written Procurement Procedures. If that is the case, then the SAU must have both in order to make sure that the FSMC is following them. If you have outsourced your food service operations, a contract must be in place in order to claim meals. Without a contract, meals may be disallowed. Technically, you cannot renew a document that has expired. Once it is gone, it is gone. Therefore, when you receive a reminder email from the state agency in January or February about where you are in the contract cycle, don't let it go. Act upon it so that you have a contract and/or renewal in place by June 30th. RFPs must be advertised appropriately. That means advertising in a statewide newspaper, not just your local one. It means you must allow between 4 to 6 weeks from the posting of the RFP and the closing of the RFP. If you are requiring a mandatory pre-bid conference or walkthrough, the 4 to 6 weeks starts then. It is not reasonable to allow 4 to 6 weeks but put the mandatory walkthrough at week 5. That gives the bidder only 1 week to respond to what they saw during the walkthrough. Remember, always keep the first tenet of procurement in mind: fair and open competition. The RFP must list the criteria that will be used to evaluate the submitted proposals. The submitted proposals must be evaluated following the criteria listed in the RFP. Budget must receive the highest evaluated weight. That means the lowest bidder gets the highest budget point, while the highest bidder gets the lowest point. Any extra guaranteed surplus is immaterial. It is information that is set aside during the evaluation process. It would be considered an over-response to the RFP. Here are some guidance memos for PLE and non-program food revenue. And here are some links to the Super Circular, USDA's Agricultural Marketing Services, and the FSMC Guidance Manual. Please feel free to contact the Office of Nutrition Programs and Services with any questions. Thank you.